have to be on alert that it's likely not going to go too much further. So I don't think, for instance, a one-day bounce is all we're going to get here, but I certainly do think we are going to go lower across the board on all stock markets and really start to head lower.
After the cryptocurrency market had lost $165 billion from its market capitalization in a week, Bitcoin dropped below $20,000 and is still struggling to pull itself back above that threshold. Back in January 2022, Soloway projected that the cryptocurrency sector might experience a dot-com moment soon, but also predicted that Bitcoin could trade at around $100,000 or $250,000 in the next 5 years. In a recent interview, Chief Market Strategist of InTheMoneyStocks.com Gareth Soloway tells us all about his latest analysis of the charts, as well as his predictions and price targets for Bitcoin and gold. In his opinion, he still believes that Bitcoin might drop further to a low of $12,000. He is also a proponent of crypto regulation, believing that it would be a positive thing for Bitcoin and cryptocurrencies in general, as institutions would feel more confident investing their clients' money in them. Before listening to him, please ensure to smash the like button and subscribe to the channel. Let's dive into his last interview now.
What are your thoughts on the bear market? And if you want to throw in your thoughts with the recession and the depression talks and how long this could last, etc.
I do think that we are headed into a global recession, but remember that recessions don't, the markets don't trade in a straight line. So you're going to get to these technical levels where people get overly bearish, and then you get these technical bounces, like for instance, when the Bank of England does something like this. And then what you'll see is people start to sway and start to get bullish again. And then as soon as they start getting bullish in a bear market, you have to be on alert that it's likely not going to go too much further. So I don't think, for instance, a one-day bounce is all we're going to get here, but I certainly do think we are going to go lower across the board on all stock markets and really start to head lower. I'm kind of isolating down, and I can show my S&P chart here.
Sure.
SPX. There's a pivot point that I'm watching. So number one, notice where we bounced today. We bounced right at the lows from June. So a technical support level right there. I think this is a short-lived bounce. You might get a week, week and a half, 2 weeks out of it. But ultimately, we have to go retest the pre-COVID collapse highs right here. So that's down around 3370 on the S&P 500. And that makes a lot of sense, right? If you think about the Federal Reserve sucking all this liquidity out of the market, it makes sense that we have to go back to the pre-period before all this liquidity was put into the market. So that would be my next stopping point. I think by year end we get there.
And that is your fundamentals coming into the market. Just to add that in, because we often talk just about technicals, but That's basically a fundamental piece.
Right. That is true. That is true. Just sucking out that fundamental money that was printed. I also think at a basis, I'm going to be looking to buy this level right here just because it is such a psychologically technical level right there. So there'll be a bounce off of that. But again, I'm in the camp where you're going to have 2 cycles to this bear market. The first cycle we're in right now, which is a cycle where the Fed is tightening, there's no more money printing, and so valuations have to come down. The second cycle is going to be after the Fed pivots, right? So the Fed is going to eventually pivot. We saw kind of the Bank of England already do that, right? So at that point, you're going to see a big bounce in the market because the Fed is pivoted. Everyone's going to say, oh, they're going back to easy money policy. I don't agree with that. I think the pivot is basically just not hiking rates anymore. And the next cycle is going to be when the economy slips into a recession, and that without Fed printing of money, if you think back to every past big market drop, whether it's a recession or it was COVID or whatever, the Fed has been printing us out. And so with inflation still staying above 4%, I have a long-term horizon of like multiple years where inflation is going to be 4% or so. The Fed cannot print us out of the next recession, and the market is eventually going to realize that. And that's going to be a big earth-shattering factor for the overall market, where they're like, wait a minute, how does the economy get out of this recession without the help of the Fed? And that's where you see that next leg down, where people say, okay, now we could be in a recession for years. I mean, it could be a multi-year recession, not just a 6 or 12-month recession period.
And looking at that support level there, if that was to happen sooner, say in a week or 4 weeks, if we just get that quick flush dump out of it, would that then change your mind in terms of timing? Or maybe we hang around those lows a bit longer and form a base?
Yeah, so overall, to me, the speed at which it comes down just would dictate how big of a bounce we would get off of it. So the faster it would fall, like for instance, if we were to go straight into it, let's say in the next 2 weeks, I would actually look for a pretty solid bounce back to this pivot high right here or this pivot low. But overall, it wouldn't change the aspect of what I'm seeing in the charts, right? It still wouldn't change anything about what I'm looking for, where I still think we have to go at minimum down to the lower end here. And I want to show you this trend line. This is a pretty powerful trend line here to see. And look at this one right here. So this is another major trend line where this is a long-term trend line where you could actually extend this out to 2009. And basically that is the long-term trend of this market. So just because we're going to 33.70 or so, I still think we have to go even lower before you get to any sort of longer-term bottom in the market. So I think the bottom line is, and this is the thing though, is a lot of people out there will hear this and they'll be like, oh my goodness, this is horrible. We're going to keep going down. But honestly, there is so much money to be made in this market because when you do get bounces in bear markets, as you know, they're huge bounces. So you just really, it becomes a market where the good investors and traders that can read the charts can time the market much better. But when you get these bounces, they are tremendous and there's a lot of money to be made both on the long and the short side.
You mentioned something about like a multi-year bear. What does that, I guess, entail? Because I've seen that in headlines, from other interviews and news outlets are going to use it and all these sort of guys are going to use it. But does that mean this market just goes down and down and down for years? Or does that just mean that we stay underneath the previous old all-time highs for years? Like how do we define that so that we're not getting scooped up in super big headlines?
Yeah, so and again, I know that sounds really scary, but I think the best thing to do is look at other markets that have gone through this, right? So number one, if you looked at the NASDAQ in the .com period, it had this insane move. In fact, let's go to that now. In fact, let's take a look at the NASDAQ chart. And then I'm going to go to the monthly chart just so we can see back to 2000. And what you can see in 2000, it was very similar to the vertical nature is kind of what we've seen here. Look at the vertical nature here. And by the way, look at how big this is compared to this. That's how scary this market is. But as you can see, you had generally a pretty big drop, but there were some big bounces along the way. And then you went into this kind of sideways to up, almost like a bull market within a bear market period where you actually could make money by just going long. Just the highs were not taken out for 15 years. And I think another good example of this would be the Hang Seng market. So if we look at the Hang Seng market here, which is the Chinese stock market, and we look at this, right? So here in 2003, the Hang Seng market had this insane run. You then had this epic collapse, but then look at the market since then. It gave plenty of opportunities for these ups and down mega moves where there was lots of money to be made. It just never really took out the highs and broke higher. So, if you're looking at the China stock market here, you could have gotten in at the highs of 07 and you're still down significantly on your money. And this is kind of what I expect for the US stock market to go through this period of digestion. Another good example of this would be the EWZ, which is the Brazilian ETF or the Brazilian stock market. And you can see here, look at this mega move from 2003 to 2008. And then you had this epic drop, which is kind of what I think is going to happen in the next, between what we've already seen in the next 12 months is what I'm envisioning for us. Then you're going to have these big bounces, but generally the market is trailing lower here. So I think, for me, this is kind of a good playbook for what I think the U.S. stock market and some of these global stock markets overall that have had big bull moves will probably go through.
Australia is definitely in that same pattern, which is why I don't invest in Australian stocks. It's just the same thing. It had a big boom and nothing has really taken off. The Aussie one is ASX or XJO, very similar. Would you split the NASDAQ and the S&P because of those runs? NASDAQ is tech, booms and busts are bigger, longer cycles to get out of those periods. S&P, it's made up of everything else, financials, tech, consumer staples, etc.
So I do think the S&P is it's a little bit more diversified, but what's still kind of scary about the S&P is that stocks like Apple, Microsoft, Tesla, Google, Amazon, they still make up 20-25% of the S&P. They've gotten so big. So I do think that overall, you may be a little bit more cushioned in the S&P 500, but I think also you're still going to see a lot of these same effects. So I just don't think, much like the tech.com bubble, when the NASDAQ fell, it fell the most. The S&P still had a nasty drop. It just wasn't quite as dramatic.
Thoughts around Dixie taking out all global reserve currencies and it being over for the rest of the world?
Yeah, I mean,
dramatic.
I've kind of been in the more bearish camp lately with the dollar. I think, number one, it's gotten way overdone. I also think that these other central banks, and we're starting to see it, are kind of in a position of saying, hey, listen, we need to kind of stabilize our currencies against the US dollar. So number one, I think they're talking to the US Fed and kind of coordinating. Like, I'm sure that when the Bank of England made this decision of what they ended up doing in the overnight, or last night in the overnight for me, they did talk to the Federal Reserve and let them know. So I do think there's some communication between central banks. But I think for the most part, I'm still a long-term bear on the dollar. I just think that in this kind of period where we're looking at a global recession, where you have Russia invading Ukraine, maybe China and Taiwan, the dollar is still king dollar. And so it's still going to be the strongest, even though longer term, 10 years from now, I do think the power of the dollar does wane significantly.
So not in this camp that Bitcoin is going to become the world reserve currency, the dollar is going down, China is going to take over. That's not how bearish you are on the dollar?
So not in the near term. I actually do think that in the longer term, so I don't think Bitcoin is going to be the reserve currency. I look at Bitcoin as more like the digital gold. So I think it becomes more of that commodity. So I think that's where you see Bitcoin go. I actually do think the digital yuan does eventually become the reserve currency. It just takes so much time. I mean, these countries are so addicted to everything being run in US dollars that it takes just a long time for it to switch over. But I do think it's a process that will happen. And I do think as that switch happens to another reserve currency, remember, all these countries hold trillions, well, maybe not trillions, but at least hundreds of billions of dollars because it's the reserve currency, and they have to do all these transactions. So as it wanes as the reserve currency, these countries won't have to hold dollars as much, and you'll see more and more dumping of the dollar on the open market. And that alone will create a situation where the dollar does decline. So I would say near term, you respect the dollar. I think you're going to have pullbacks, but it stays strong. Longer term, I am a bear on the dollar. Think about this. The pound is almost at par with the dollar. The euro is almost at par with the dollar. Could it be that these currencies are being driven to par value to create a new world currency that basically is uniting a lot of the world? And again, I don't know if that's the case, but it is kind of interesting. If we see all these currencies kind of go to the same price, then why not create a one power currency that would then become the future reserve currency?
What might happen in this particular decade? Crypto going lower. What are our low targets? And what do we think with the highs? Let's start with the lows for Bitcoin, the crypto crash right now.
Okay, so right now, crypto getting a little bit of a bid as the dollar has fallen. Per the chart, we're in this bigger wedge pattern. So again, if I zoom out, this is pretty remarkable wedge pattern where you basically had the all-time high down-sloping trend line. If we can break above that, it gives you a little bit of a short-term short squeeze on Bitcoin. Overall, I don't see it lasting for very long, and I ultimately see more downside. Right now, my high-end target on Bitcoin is around the 12 to 13,000 level, which would put us right down here at this pivot. Right now, we're still hovering around that 2017 all-time high before the last bear market. But I do think eventually it gets pushed below this level and collapses down to, again, 12 to 13,000. I know a lot of people have heard the headline of, like, Gareth says it could go as low as 3,500. That's kind of a worst case scenario for me, where if we really see, the financial markets collapse, we know that Bitcoin kind of follows the financial markets. It hasn't become a kind of a goldish type thing yet. Then you could be looking at a $3,500 target. Long term, I love Bitcoin. I think there's a huge place in the economy, in the global economy for it. But again, cycles are cycles, and we can't deny the fact that, number one, we're in a bear cycle. Number two, this is the first bear cycle that you haven't had Fed printing of money, which means it probably is going to be a worse bear cycle than past bear cycles. And we haven't even corrected 80% yet, which is what the past cycles did. So you have to kind of take that into kind of analysis. Where I get my $3,500 target, if you compare the .com era to the last couple years in crypto, where you saw Dogecoin and SHIB and I mean these crazy meme coins, and some of these coins going up thousands and thousands and thousands of percent. If that was the equivalent of what happened in the dot-com era, and Amazon in the dot-com era collapsed 95% before going up tens of thousands of percentage points, then you have to think maybe a 95% correction in Bitcoin could occur, in which case you're looking at 3,500.
All right, so that's where that number comes from, just as an absolute worst case. But essentially, it still remains above the previous lows, which, in technical sense, it's putting in higher lows.
Yes, higher lows on the chart, correct. So you're looking at the June right here. But I think you have to kind of keep in mind that this could be a bearish pattern. If we go to the parallel channel, right, we put a trend line below these lows here, and we drag this up, you basically are creating this. And so when I'm talking about maybe a breakout from here, you probably would head as high as this level here, which is around 25,000, but you're still in a sideways channel, which from this drop, or you could look at a bigger drop, it's still bearish as of now. It hasn't flipped to bullish yet on Bitcoin.